Turning to our new business news now, and Ed Boyd joins us live. Ed, a busy finish to the week with some economic news about the Reserve Bank of New Zealand holding its cash rate meeting today. Rates expected to reach 2.5%.
We'll know at midday what the Reserve Bank of New Zealand is going to do, but it's very likely going to lift the rate from 2 up to 2.5%, so a 50 basis point increase. Look, it's important for us because New Zealand's central bank's been a little bit ahead of the Reserve Bank. They started lifting rates back in October and rates have been rising steadily since then. Our economies are pretty similar, although New Zealand's more towards agriculture, we're more towards mining. But on the whole, we're pretty similar economies. And this is basically showing us where Australia's cash rate will probably be in about 12 months' time, I'd say, Pete. Well, the expectation is we'll be at 2.3% by the end of the year, probably 2.5% by another 12 months or so.
Okay, now some figures are going to be coming out of the US today. Inflation numbers. The market's expecting another red-hot figure here.
They're expecting it to remain at 40-year highs. So inflation is going to be coming in for the 12 months to June, roughly around that 8.8%. So that's slightly higher than the month before. So this is becoming a big problem for the US Federal Reserve Bank. They've been lifting interest rates all year, basically since March. And so far, that has done nothing to push down inflation in the economy. So these latest figures, they're likely to come in higher than the previous month. However, if they do come in lower, then it's obviously a good sign that everything's starting to get back to normal, but I don't know if that's going to happen.
Okay, so if it's higher, then does that mean that our markets end up dripping in red?
Absolutely. Look, if it's higher inflation in the US is not good news for us.
Yeah.
It's going to have a negative market reaction, I'd say, across the whole world.
Tomorrow, we'll get the unemployment figures, though, for June. Ed, unemployment could fall to 3.8%.
Look, economists believe about 30,000 jobs are going to be created in the month of June. The unemployment rate's been sitting at 3.9% for the last few months, and they think there's enough in it with 30,000 jobs to push it down to 3.8%. So Australia's economy is just slowly getting closer and closer to that magical full employment number that we don't really know what it is, but the RBA suggested it could be around that 3.5% mark. So more jobs still being created in Australia. We know there's a lot of skill shortages out there, so there's a lot of jobs available. So it sort of makes sense that unemployment is going to keep slowly creeping down.
And yet more economic news Friday. China will release its GDP numbers for the second quarter, Ed. Economic activity expected to contract 2%.
Look, it's not often you see a negative quarter of GDP for China. The whole reason, of course, is they've got a lockdown right now, but they've had a lot of lockdowns this year, shutting down their workers, stopping factories, reducing economic activity. So the expectation is the economy will actually contract by 2% in one quarter, which is a pretty big contraction for China. Overall, for the course of 12 months, it's still expected to be up 3%. But this is important for Australia because they're obviously our biggest customer, buying our iron ore and a lot of our other products. And if economic activity contracts there, it's going to be a bad sign for us. They're going to be buying less things, and it's going to be a detriment to Australia. So look out for those numbers on Friday.
All right, Ed Boyd, thank you.